Welcome to the Professional Edge. My name's Todd, tax attorney, CPA, and certified financial planner, host here on the Professional Edge for going on 5 years. What we're talking about is protecting your assets. What we're not talking about is all this liability creditor protection in a lawsuit. What we're talking about is actually protecting the assets in which you've earned to make sure that they go to the right person at the right time in the right amount. We've talked about the IRA beneficiary. We've talked about having the right beneficiary on your life insurance. We've also talked about having the right beneficiary on your 401k, IRA, 403b, the alphabet soup of the qualified plans. Again, when we talk about protecting our assets, don't go off into I'm in the courtroom and I'm hoping to avoid paying out this judgment that's going to be rendered against me. No, we're talking about protecting your assets. And when we say protect your assets, let's do some tax planning. Because if we do some tax planning and we legally do not have to remit that money to the Internal Revenue Service, then isn't that really protecting your assets, doing some tax planning? So you may have your iPad, your internet, your high-speed internet, and your smartphone, your laptop computer, all those good things. Now, we all know that we cannot deduct the cost of personal expenses, but if we were to start a business and have those same expenses, then they would become legitimate business expenses, therefore deductible on our tax return and offsetting our other ordinary income. So again, if we have these personal deductions, we start that small business on the side hustle, and even being a retiree, you know that you have a hobby, which you can only deduct your hobby expenses up to your hobby income. Well, let's change that and let's go into business. And when we go into business, then we can actually deduct expenses in excess of our income in the business. Yes, we could have a negative, let's say $3,500 or $4,000 for quick math. $4,000 of deduction, you're just getting started, so you didn't have any sales in your first year. Well, lo and behold, that $4,000 is going to be deductible at 25% bracket. We just saved you $1,000. Now that is asset protection in our mind, that we've protected your assets from being overpaid to the Internal Revenue Service. Again, you got to meet some criteria to make sure that you have legitimate business intentions, and therefore you are able and entitled legally to deduct those $4,000 of expenses against your other income and reduce your tax liability by that 25% quick math marginal bracket. And therefore you just saved $1,000 by listening to the Professional Edge and doing some asset protection. That is not paying the IRS more than you're legally responsible to. So let's think about this also, on your asset protection. Are we leaving our estate plan to our kids outright? Okay, that's the typical plan. I'm going to give everything to my surviving spouse. And then if my surviving spouse doesn't survive me, obviously there is no surviving spouse, then it goes to the kids in equal shares. That is a simple, downloadable LegalZoom document that some individuals come into the Cunningham Center or come into Atlanta, or they send it to us to review, and when we start the conversation to be able to start working with them. So that's all well and good, but let's think about this for a second. We have a very sizable estate. Let's say it's north of $500,000. It's going to be down to the kids in equal shares after surviving spouse. Well, those kids are going to inherit that money, and you know what? There's always a spouse there. And your largest potential creditor is your ex-spouse. So why wouldn't you structure this and say, I give it down to my kids, but their share shall be in trust for them. Therefore, if they have an untimely divorce, then these assets that are left to your children will not be subject to the claims of that ex-son-in-law or ex-daughter-in-law. So again, you have to protect your assets from things that can happen. Yes, we run through a scenario. Can we cover everything? The answer is no. but we can cover the majority of what might potentially come down the road. So if you like what we're saying and you like what we hear, what we can do to help you plan to protect your assets, do give our office a call at 877-654-9798. That number again, 877-654-9798. So let's think about this also. Next turn on the dial for protecting your assets. You have this investment portfolio, you have some after-tax money, and you also have your IRA account or your 401k. What have you done to protect that value? Well, a lot of us have not done anything to protect that value, so we analyze that and say, okay, does it make financial sense to take some of the risk out of the portfolio and park that money, so therefore, A, the principal is 100% protected, and then any gains that you receive is 100% protected. And if the market has a correction, 30%, think back to COVID of March of 2020, then we don't participate when the market goes down. Think about that again. Okay, we're going to remove $100,000 from market risk. $100,000 stays in play. It's not subject to market conditions. The market goes up 10%, and the way this instrument works is you participate a percentage in that index. So let's say 80%. So you would get credited 8% interest. So therefore your account value is 108. Pow, market has a correction of 30%. Guess what? Your account value remains at 108. So if that is of interest to you, inside your IRA, we know that you're not going to use that last $100,000 or $200,000 of monies in there for a while, and therefore, does it make financial sense to reduce some of your investment exposure to the stock market? Your investment risk. Yes, the stock market has hit record highs, continues to hit record highs, and we all know there's a new administration. We have $1.9 trillion of stimulus on top of the first economic stimulus, and we just know there might be some implications going forward. The interest rates on 30-year mortgages have actually risen, and therefore that will stifle some of the demand in the marketplace for housing, makes the cost of owning a house a little bit more expensive. So these are things that you need to put in mind on protecting and preservation of your investment portfolio that you've worked 30 years to accumulate. Now, this is not the magic bullet for everyone, but it's a financial instrument which a lot of our clients at estate management counselors have implemented. We would rather have a return of our principal, and we are not so much concerned of a return on our principal. I'll say that one more time. They are becoming more concerned of returning their principal, not a return on their principal. So if market risk and your market exposure is too much, or you don't have any idea whether there is too much, or you've been thinking about making this evaluation on reducing your exposure to market risk, do give our office a call at 877-654-9798. That number again, 877-654-9798. Now, we've talked about putting all these things together, meaning protect your assets. We've talked about estate planning, tax planning, and your retirement analysis. And what we've done at Estate Management Counselors is put this all three together. If you were to engage us individually for each of these, it's over $10,000 of value. The information that you can get, it's $3,000, and we guarantee that you'll be happy with your result. So you can get the information on that by either calling our office at 877-654-9798. That number again, 877-654-9798. Or if you don't want to pick up the telephone call and still remain anonymous and do it on your own, which a lot of people do, they want to take that first step and not commit anything, then you can visit our website at emcthebundle.com. That is Echo Mary Charlie thebundle.com. Echo Mary Charlie, thebundle.com. So back to protecting your assets here as a listener on the Professional Edge. Let's talk about the correct withdrawal strategy on protecting your assets. Now, if we don't do your retirement withdrawal strategy correctly, wouldn't you be overpaying the IRS? And if you overpay taxes, then we don't have that capital anymore to earn a return. So let's say you overpay the IRS by $10,000 because you're not doing your distribution strategy right to fund your retirement. Well, that extra $10,000, if the market returns 10%, then that is $1,000 you just left on the table. Now that $1,000 is gone forever. It's never going to be able to return, or you're never going to gain that investment return. And also the $10,000 you did overpay the IRS, meaning you legally paid them the right amount based on the distributions that you took, but if you structured it properly, then you wouldn't have to necessarily take those taxable distributions. There are different ways and strategies to effectively fund your retirement income needs, but do not overpay the IRS. But you doing it yourself or this 1-800 firm, they're not helping you plan this distribution strategy. They're not licensed to give you tax advice. But we are at estate management counselors, and we structure things differently. Therefore, if we save that $10,000 in taxes, we have that $10,000 still in your account. That's protecting your assets. And therefore, that $10,000 is going to earn that rate of return. For example, 10% is going to be $1,000. So you still have the 10 plus you earned another 1 because you had that capital still in your account. So that is protecting your assets as well. It's not just the claims of the creditors. It is you individually making choices and imposing unnecessary tax liability and therefore overpaying what you should have paid based on your plan of distribution that you have. Because the planning for accumulating your assets is different from the plan of distributing your assets. If you say, hey, I'm going to distribute all my assets from my after-tax savings account, wait until I'm age 72 to take my required minimum distribution, you might be leaving some money on the table, not protecting your assets. So again, at estate management counselors, we run through that analysis to see what the optimum distribution strategy is. Is it taking $2,000 from my IRA before my required beginning date, age 72, or is it that I wait until age 72? A lot of our listeners think by default they need to wait and defer until age 72 to take any taxes out, but they forget to take into account their marginal tax bracket. That's what being a tax attorney and a CPA we do for our clients at estate management counselors. We look at the marginal bracket in which the client's in, and then we structure that because I would rather have the client keep that money in their account and not overpay the IRS, meaning they're overpaying the IRS because their distribution strategy is not as efficient. So again, if you like what you're hearing here on the Professional Edge, give our office a call at 877-654-9798. That number again, 877-654-9798. Be sure to check out emcthebundle.com. That is Echo Mary Charlie thebundle.com. I appreciate you listening to the Professional Edge. My name's Todd, tax attorney, CPA, and certified financial planner.
With today's financial markets, are you getting the personal and professional attention you and your money deserve? Clients of estate management counselors benefit from having one set of professionals advise them on their tax, estate planning, and investment advice. We call that the Professional Edge. Todd is a tax attorney, CPA, and certified financial planner. With over 15 years' experience, he welcomes the opportunity to assist you in preparing for retirement, implement effective tax planning strategies, and to help you properly plan your estate. His radio show, The Professional Edge, is aired weekly on Sundays at 9 a.m. If you're interested in meeting with call his office at 877-654-9798. That's 877-654-9798. Do you want to feel more confident about making the right investment, tax, and estate planning decisions? Today, these decisions are more complex than ever. Have you thought about working with a professional advisor and not sure who to turn to? Not sure what qualifies one to be an advisor? Seen Todd is more than qualified as a tax attorney, CPA, and certified financial planner. Seen is with Estate Management Counselors. Estate Management Counselors operates as an independent fee-only investment advisory firm. They're dedicated to gaining a personal understanding of their clients' objectives and implementing professional counsel and advice to achieve those objectives. So take a second to talk with Seen Todd to learn how you can benefit from their multidisciplinary practice where they coordinate their clients' legal, tax, and investment strategies into one comprehensive and integrated plan to enhance and protect their clients' financial security. You can reach Estate Management Counselors and speak with Seen Todd by calling 1-877-654-9798. That's 1-877-654-9798.